So when it comes to Oatly, Wall Street has been very quiet initially, but now it seems that they're ready to share their analysis with the public. And several of them are way more bullish than I could have ever imagined. And just for fun, I thought we could do a little speculation where we could see the stock price near term in the next year to 2 years. And that is what we're going to talk about here today on the PlantStock channel. And if you're new to this channel, welcome. If you're not, then obviously welcome back. And as always, I would truly appreciate an early thumbs up since it does help spread the channel to a lot more people out there. And if you haven't subscribed to the channel yet, and if you want to keep getting more information regarding Oatly or other plant-based companies like Beyond Meat, Tattoo Chef, the very good food company to name a few, make sure to subscribe and don't forget that magical bell button. Thank you folks, I truly appreciate your help. And as tradition dictates, let's take a look at the stock chart. Oatly, ticker symbol OTLY. And right now it is at 27.46. So it's up about 0.33%. So it's basically standing still. Today, the market has been open about 1 hour. But we can see the last 5 days has been kind of a roller coaster. But if we take a look from a month perspective, it has been a really good uptrend. And just for some kicks, I thought we could take a look at 3 different companies, plant-based companies, to make a comparison how well they've been doing the last month or so. Oatly is the blue one in the middle here, and it's basically gone up right now around 35 to 36%. And Beyond Meat, as we know, has had a really interesting month and is doing really well. It's about 37%. And then we have the Tattoo Chef, which has been doing fairly well. What we know is it jumped higher before. It's up around 9%, the yellow line here. So just an interesting comparison. And guys, if this is something you want to see every now and then, that I compare the different plant-based companies every now and then, let me know down in the comments. So what is it that Wall Street is predicting in terms of stock price when it comes to Oatly? Well, take a look at this.
Weeks ago, and Wall Street finally weighing in on the prospects for the company that Saz, I guess, is reinventing. Oatly went public a couple weeks ago, and Wall Street finally weighing in on the prospects for the company that Saz, I guess, is reinventing the non-dairy space. What's the street saying as they can finally break down the model and offer their initiations here on the stock?
Yeah, you're seeing the shares under pressure here in the early going today, down about 3%. Quiet period is now over, so analysts could start publishing their research. And overall, the mood on the street seems to be pretty bullish. You had Jefferies out this morning with a $34 price target and an overweight rating on the stock, pointing to a potential, and Miles, I know you'll dig this, $900 billion TAM, or total addressable market opportunity for Oatly, I would assume, as they take share away from traditional cows, udders, milk.
Now, folks, did you hear that? Did you listen carefully? He said $900 billion in TAM, total addressable market. And that means that, just imagine that, folks, that if within the next 5 to 10 years, if Oatly could just get 1% of those $900 billion, that would be $9 billion in revenue. And last year, they had $400 million. So it's over 22 times X in revenue. That's huge.
But then you also have Piper out with an overweight rating too as well, $30 price target. They're noting a 30 to 40% price premium for Oatly products versus other competing products, and still strong sales. So that, in other words, is evidence of pricing power. Whether Oatly can maintain that pricing power as more folks like a Chobani comes into the space with cheaper prices is to be determined. And even RBC, they're out here with their sector perform rating here, $28 price target. They still see Oatly at a 70% growth rate, compound annual growth rate over the next 3 years. And a good quote here from our friend Laurent Grande over at Guggenheim. Quote, "We think Oatly is uniquely positioned with a defensible market position thanks to an emphasis on sustainability," that's always good to see, "a science-based and manufacturing competitive advantage, and a disruptive marketing with a unique in-your-face brand message to challenge the status quo." Certainly in-your-face marketing there for the Super Bowl, and CEO Tony Peterson last go-around definitely drove a lot of attention. So my take here on this one is pretty straightforward. Capacity expansion is needed for profits. Oatly lost a little over $60 million last year. They're putting a lot of those IPO proceeds into building out new manufacturer plants. So you don't see the out of stocks in oat milk that our producer Val Caval has been talking about at Starbucks over the past few weeks. Also, too, ESG friendly stock in Oatly. And bigger picture here, is Oatly the next Beyond Meat-like stock? Beyond Meat came public in May 2019. The stock is up 500% since that company's IPO. That is their IPO price. It was at $25. Oatly shares up 69% since they debuted last month. So a long way to catch up to Beyond Meat. Time will tell if it does.
I feel like at this point it almost can't be the next Beyond Meat because the stock didn't go up like 4x in the first 3 days. So it's already lost out. Already lost out on that one. I will never forget when Beyond Meat went public. Had never heard of it, wasn't thinking of it, was out at Berkshire, and all of a sudden there was a stock that had tripled in its first day of trading or whatever that stock ended up doing. I think Zoom went public at right around the same time. So just an interesting period there for markets back in the halcyon days of 2019.
Now, I agree with the comments in the end. I mean, even though I'm really bullish, I can't really see Oatly having the same kind of momentum in the next couple of months as Beyond Meat had. I mean, Beyond Meat opened up at $25 about 2 years ago, and within a couple of months, it ended up at around $240. Now, that is huge. That's a huge leap, and I can't see, to be honest, that Oatly is going to follow that same streak. And the reason is quite simple. When Beyond Meat IPO'd, it was around $2 billion or under $2 billion. When Oatly opened up a couple of weeks ago, it was $10 billion. I just feel that that would be an incredible valuation leap there. So I don't see that happening, but you never know with this market, obviously. So one of the analysts that are really bullish is Guggenheim, and they predict that the stock price should be around $32. And I thought it would be interesting to hear what they had to say more specifically. So let's take a look at this.
And I think what should give confidence and comfort to investors is actually the concept has been proven right across 3 continents. Over the last 3 years, the brand expanding from Sweden to the UK and Germany in Europe, and the US and China, where actually oats were a very small piece of the business. Actually, in China was not even included in the portfolio. So they prove the concept, which I think is it's really strong for us.
Yeah, in addition to geographic diversity, you've also talked about the successful rollouts Oatly's had with partners like a Starbucks. But I'm curious what you see down the line in terms of product. Surely they have to expand beyond their bread and butter right now. What kind of catalyst do you see in terms of additional products coming to line that could boost the stock even higher?
Yeah, so what we say that, it's not the demand that is a limitation right now, it's really the supply. So they will need them to, and they are investing a lot, about 70%, in CapEx this year of their sales. So they need to open new plants in order to, continue to fulfill, the consumer demands. Just in those 5 countries, expanding really primarily in milk and barista, we think, they will reach about $2 billion worth of sale in 23. And still, on this, there is about $300 million upside if they can fulfill all the demands. Just on those 5 countries, and milk and barista. And we think they can expand geographies. They can expand in different subcategory of plant-based, milk, like yogurt or ice cream. And that will, in addition to those $300 million we just mentioned, add another $900 million. So, we kind of have a very, strong view on their future potential. And we are just talking here about expansion into sub-other categories or 3 or more countries. But they could go to Latin America, they could go to 4 more countries in Asia.
So you really get an overall impression that the sky is the limit when it comes to Oatly and their expansion endeavor, right? And as this analyst states, it's not so much about being a demand issue, more of a supply issue, because it does seem internationally that the demand is out there. This is a popular product, especially in the US, in Europe, and China so far, right? So if they're able to meet that supply right? Meet that demand with the supply. And I do believe they will, obviously, because as we know, we've heard Tony Peterson talk about this. Take a look at the video up here if you haven't seen it. He talks about that they're using all their money now and much of their resources to keep building several new facilities to meet that demand. So I do see that happening. And when that eventually, hopefully happens, I do believe that the next logical step here will be to move into other markets. And Latin America would obviously be a really huge market, and also other parts of Asia. So huge opportunities there for sure. Now, one of the more important things that I think Guggenheim talked about, the analyst from Guggenheim, is that they do believe that in 2023, this company could have a revenue or should have a revenue of about $2 billion. That's a 5x in revenue from today, right? So within a 1.5 to 2 years. And what would that actually mean, right? Because let's again take a look at their PA's ratio, as we talked about several times, right? So right now the PA's, the price to sales ratio, is about 34. It's temporarily down to 34, which is very steep. It's very high, right? And what would then happen? And that's because they have about 400 billion right now. But what would then happen if the stock is actually at 32, as they hope, but eventually have 2 billion in revenue? Well, that would actually give this company a PS ratio of about 9.5, and that's really low. 9.5 in 1.5 to 2 years from now. So that's incredible for having $32 as a price target. And remember, folks, I mean, Tattoo Chef, which is a smaller company, not at all as well known as Oatly, has a PS ratio of about 10, which is really good. This is 9.5 for a company like Oatly. And then we take a look at Beyond Meat, which is around 20 to 22 off and on, right? Tesla, same. So that means, folks, that I could actually see them being around 20 in 1.5 to 2 years and still doing really well. And what does that tell us? So this tells me that if the stock would be right now, or at that time around $32, and they would have $2 billion in revenue, I think we could easily double that up, right? So the PS ratio would be 9.5, but if we just double that up to 19, right? Then obviously they would have a market cap of about $38 million, but still just a PS ratio of 19, which would double the stock price to $64, right? That's the interesting thing to remember here. Obviously, again, we're just playing with the numbers. We're not counting in eventual dilutions or different events that could happen to the company. But I still do believe that having a PS ratio of around 20, 19 or 20 should be more than reasonable for a company of this status. And in one way or another, having a stock price that's around 60 or more seems also more than reasonable, in my opinion, considering the kind of moves and expansion this company is going to do. Let me know down in the comments, folks. What do you think? What kind of stock price could we expect in 1 to 2 years from now? Now, I think it's really important to note here one thing, and that is that even if I'm very bullish on this company, and I think you know I am, that's what I'm going to be even when there will be times that the stock is doing poorly, if their revenues have halted or is not going as well as analysts believe. I'm still going to be bullish long term because I'm looking at this from 5 to 10 years ahead. You have to realize that even though there are several analysts right now from Wall Street that are bullish, right, and they're putting up some good numbers, right, when it comes to stock price action, if they're going to have some bad quarters, right, they're probably, analysts from Wall Street, they quite quickly turn around again, right? Probably take down the numbers quite quickly again. So be aware of that, right? So I just want to remind you, as I've said before, that if this is a company you want to invest in, at these prices right now, because it is very overvalued. But if you look at it from 5 to 10 years ahead, that's a good price, right? So think about this as a long-term option if you're investing now. And be prepared for the real roller coaster ride, because that's what you have to expect with a company like this. All right, folks, I truly hope you got some value from today's video. And if you did, make sure to smash that like button and help me out. And if you want to keep getting more information regarding Oatly, the Chef, Beyond Meat, or other plant stocks out there, make sure to subscribe and don't forget that bell button. Thank you, folks. As always, I truly appreciate your help. And I don't think you've forgotten, but this was not financial advice. This is just my own opinions and thoughts. It's important to always do your own due diligence and invest safe. Folks, I truly hope you have a wonderful Tuesday, and I hope to see you tomorrow. Peace out.